Hi, good morning again, everyone. Just wanted to redo this video that I did last night, as I unfortunately did not realize that my screen was not shared, so you were not able to see the visual. You were just only able to hear the audio content. So I'm just redoing this video. So before we begin, let's just pray. God, we just thank you again for your blessings and for your goodness and for another opportunity to trade this week. We ask that you will be with us and grant us success and grant us consistency. And be with anyone watching this video, help it to be an inspiration and help to them also, we pray. Amen. All right, guys. So um, if you had a chance to listen to the audio, you'd remember that I mentioned to you that the NASDAQ 100 is a historically bullish instrument, which means it only buys historically. Yes, there are sells, but those sells are going to be temporary retracements in order to create higher lows on your bigger time frames. Now, let's quickly look at what happened last week. So this was last week. My blue lines are my weekly boundaries. So last week we saw that the price opened up and it broke the all-time high 3 times in Monday's session. Okay, before settling on the final all-time high on on Monday at between 6 and 7 a.m. Okay, since then, all right, all those days, it was still making higher lows, higher lows, higher lows. Okay. But in that consolidation period, we saw here that it made a series of lower highs until eventually on Friday, it actually broke that temporary structure to form a new higher low. Okay. Now this says new low on the 1 hour time frame. However, but remember, I always mention to you guys that the way I look at it is I don't use my small time frames to actually make my final assessments. All my time frames, all my assessments are done on my large time frames. So which means when you look at this 1 hour time frame and you see this new low chart, okay, what you have to do is you scale up. So you go up and you'll see that on your larger time frames, you are in fact making higher lows, and your next move is going to be a natural higher. So if we look at the 2 hour, you still see it saying a new low. Okay. However, this new low is higher than a previous new low, so it's still considered a higher low. Same story with the 3 hour. All right, it's a new low, but it's higher than a previous new low. Same scenario with the 4 hour. Same scenario with the 5 hour. When you get to the 6 hour, this is when you actually see the trend actually, in fact, holding up. Because as you get bigger, it becomes more reliable. So now that you're on the 6 hour, you'll see that this is, in fact, a true higher low. Okay. All right. So your next natural move is expected to be a higher high, which is going to break the all-time high, which was formed last week, Monday. Okay. And then we can continue the trend. And as you go up the line, you will see this trend holding out. So you look at the 7 hour, same scenario, it's a higher low. 8 hour, same scenario, it's a higher low. 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, still higher low. Okay. When you get to your daily, notice what happened. There was nothing that was formed on Friday. Okay. You get to your weekly, same scenario. Nothing that was formed um, for the week. Okay. Monday to Friday, nothing was formed. Okay. But when you look at the weekly, it's interesting. You see that the trend on the weekly is making higher lows, higher highs, higher lows, higher highs. Okay. So your natural move is going to be another higher low to a higher high. However, the weekly candle experienced what you call it ran out of time on Friday. So basically, the week finished. The candle finished. However, it fell short of actually breaking the previous week's support to form a new higher low. So for that, you have to jump down now and look at your largest time frame that completed a move, and that is going to be a higher low on your 23-hour time frame. Okay, so that a number of questions came into the last week. How do you identify the higher lows? You have to wait until the time frame expires, and then you actually see what time frames are in fact making those higher lows. All right, so right now, last week, we completed the week, and the biggest time frame to make that higher low was the H23. Okay, now I want to address a number of concerns. There are a number of um, chatters on, on the social media feed last night last week on the Minds feed that, oh, I got Friday's trade wrong. No, I didn't. Like I've always told you guys, I basically trade from my largest higher low to my higher highs. So I have trades that I've been holding since August of this year. Okay. August of this year, I've been tracking this buy. Now, if I came in here in August, any higher low that has been made, any retracement that has been made, it's still higher than my entry point. Okay. So even if I went in and took a trade here on Tuesday, okay, and it suffered this retracement, okay, that's only 2 trades out of the many other trades that I have. So with this, it's not going to affect anything that I'm in. I'm still in profit overall. 2 trades might be in the red, but it doesn't matter because I've been taking my higher lows all along, just with a step, higher low, until it breaks to make that higher. All right. So that is important to note. Well, another thing that I want to point out is that I've always mentioned if you are just coming into the trades, okay, and you're not sure where your higher lows and your higher highs are going to form, it is always okay to take a higher low. And if it does not make a higher high like it did here and made only a lower high, you would still be in profit. So you can always take this profit, wait for it to come back down to make another higher low, and then you do the same thing. If it fails to go all the way up here, take your profit, wait for it to come back down here, and then you trade again. That is how you constantly make profit, build your account, scale your account when using that strategy. And like I said to you, once you employ that strategy on the largest time frame, I will say this, it will be impossible for you to actually lose a trade because you are going with the trend. The only time you will lose a trade is if you take a, a, a entry that was not the largest higher low and you suffered a retracement for it to make a larger higher low on a larger time frame, and your account could not handle it because you're over leveraged. But once you have been leveraged successfully and everything like that, these retracements do not bother you. You just sit and you wait for the price to actually get back in trend. All right. So that clears up that. So what am I looking for this week? Okay. Let me go down to back down to my smaller time frames. As I mentioned to you, as you look, you'll see here, this is the 1 hour time frame. Notice this was the retracement. This was what everybody was getting excited about on Friday. Okay. And I'm like, guys, this is just the time when I wait. Yes, it's in a retracement. Yes, I've been in this trade for a buy for 3 days. Yes, I took the trade early, but it's okay. Because as I said, when you have trades that are coming as far back as from August, this retracement does not bother you. Okay, so I'm not necessarily interested in getting my daily moves and everything like that. As long as I'm staying with the trend, I'm okay. All right. So this is something that will take practice. This is something that once you guys get the concept and get the hang of it, you'll see how easy it has become. Now let me just go to a bigger time frame to show you exactly what I'm talking about. So if you run a scenario, let's say, for example, you took a sell, okay? Let's say, for example, you took a sell and you're saying, okay, yes, the market is going to crash. The market is going to crash. I've always maintained and I've always said to you guys, sells are temporary. Any sell that the market makes, it's only to create a higher low on a bigger time frame. Okay. All right. So let's use this lower low right here. Okay. So I'm going to get my tool, my highlighter tool, and I'm going to mark this section right here. Okay. All right. Let's go back here. So I'm going to move, we're going to do the historical back testing. Okay. Now, let's say you went in and you're like, oh my goodness, yes. A lot of people will look at this and say, yes, this market is now bearish. No, it's not. You have to look at your bigger time frames. The market is not bearish. It's bearish on the 4 hour currently because it's actually trading to make a large higher low on a bigger time frame. Okay, so look at this. We see this here, market, we say, okay, fine, it made a lower low, it made a low that's lower than a lower low. So this is obviously bearish. A lot of people will go in for this for long-term sells. Well, look at this. Let's look at what happens. Let's say you came in here, you took a sell right here. Okay. We'll mark here and we'll put it in green. Okay. It's a different color for that. So we have it in green. You came in for a sell right here. Okay. Look at what happens. All of this time you're in profit, and that's fine. It's a nice sell. Okay. But like I mentioned to you, I'm not trading for sells. I'm waiting because I want to get a biggest higher low to go all the way up to make a high, all right, or a higher high. So let's mark this point again. This here was your lowest point, okay, in this move. So when you look here, going up to a bigger time frame, remember this is your 4 hour. A lot of people will say, oh yes, the 4 hour is the biggest time frame. No, it's not. You have many other time frames. You have the 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, all the way up to 23 before you get to your daily. All those time frames are larger than your 4 hour. So let's look. So we go to the 5 hour. That low right there still translates to a lower low on the bigger time frame. Okay, keep going. On your 6 hour, that's where you are. So let's go all the way up until you get to your daily time frame. Daily time frame is at a low. Okay, let's look at your weekly time frame. Weekly time frame is at a higher low. So remember I said to you, your smaller time frames may be showing lower lows, but they're only there to facilitate the higher lows on your largest time frame. So you see you have a higher low here on your weekly. Let's look at your monthly. The monthly did not even register a higher low, which simply means that the market is still in the trend of higher lows, higher highs. Your largest higher low at this point is going to be your weekly. Okay? All right, let's go back to the 4 hour and let's look at something else now. All right, so if we're on the 4 hour and we're here, remember, I would have taken this sell because I'm saying, yes, the market is dropping because I'm looking at my 4 hour. And you would have gone in and you'd have probably drawn up some trend lines, like you'd probably put one there, and you'd probably put another one here. And you're like, yes, this market is in fact going down. All right. And you also see that it's widening, it's going down. Look at what happened. Price came right here, bounced on this trend line, came back up, broke through the trend line. Okay. Look at what happened. It's coming back down, and you're like, yes, this is confirmation. It's coming back down. Look at what happens. Remember, you're in for the sell. Okay. So we keep going. Look at what price keeps doing. Now it's starting to make higher lows, higher highs on the 4 hour. Starting to make higher lows, higher highs on your 4 hour. Okay. Now look at what price actually continues to do. All right. And we'll just speed it up in the interest of time. All right. So price actually does that. Remember, I came in here. This was my entry point right here. All right. Let's look at what price actually does. So that's why I say when you take the trade, you wait and you just sit and you wait it out because the price will always come back and the price will break above your highest point because the market is making higher lows, higher highs. All right. See what happens. This was your entry, and you're in for this long-term sell. Look at where the price is, almost back at your entry point. Okay. Price kept doing that. Price kept going. All right. Look at what happens. Now, eventually, price actually broke, and it went up and it made another all-time high. Okay. So you look now, you'll see a price actually did the sell-off last week, and this is where price actually entered. So if you entered here for a long-term sell, if you didn't take your profit here, guess what? You're almost in the red. Last week, you're barely in the green with last week's sell-off. Okay. Now let's look at the reverse scenario and why I say I always trade the trend. Okay. That's using the same points. So instead of me entering a sell here, I wait. Okay, so I miss all of this trade right here. I wait. Okay, so let's measure this. This was a move from here, and it's going to be approximate. And it comes down here. That's actually about 35,000 pips. All right, let's say 30,000 pips. Okay, so I've missed 30,000 pips. And this would have been from Thursday, July 11, and this would be Monday, August 5. So a whole month, almost a whole month of not trading. I'd have missed those 30,000 pips. Okay. But I waited for price to get here, which was, again, the largest higher low on a weekly time frame. And I entered a trade right here. Now look at what happens. If I went in and I took this entry right here, I'm going to put a line here so that you can see. All right. I took this entry right here. Okay. And it's a swing trade. It's a buy. Like I say, when I take my swing trades, I just leave them. I don't need to monitor them. Once I come in on the largest higher low, even if it's not the largest higher low, as long as I have swing trades in the past to cover it, I just leave it because the price will come back. All right. So I took this trade right here. All right. Even then, let's say, for example, I took an entry right here. All right. Let's say I saw this lower low and I took this entry right here. Let me change the color. Okay. Say I came in here. Look at what price did. It bought up. I'm in profit. Okay. But look at what, let me move this back. So let's move this back. Okay. So I came in on this red line. Look at what price did. Okay. I'm in profit. Came back down. I'm in the red. It went up. I'm in profit. And it came back down and it dropped. A lot of people at this point are panicking. A lot of people are panicking. They're like, oh my God, it's going to sell off. No, it's not. It's just making the largest higher low on a bigger time frame. Now look at what price did. Remember, this was my entry. Okay. This would have been the best entry, but let's say I was impatient like I was this week and I got in here. Okay. Look at what price does. That's why I said all you have to do is wait. The price will come back. Okay. So look at what price did. It came, it did its consolidation, it did all of this. It's still below my entry. Finally broke above my entry a little bit. Then it went and it did a whole bunch of consolidation. Let's just play it out. Okay. Now I'm in profit again. Now remember, I just took this trade and I left it. Just left it. Look at what happened. The market is historically bullish. You will be in profit at some point in time. There's no if, nor buts, nor maybe. It's going to be impossible for you to lose this trade again. All you have to do is just be patient. See, came back, I'm in the red again. But look at what happens. No sooner than I'm in the red, I'm back in the green. Okay, you got to trade the trend. And that's one of the reasons why I tell you guys, I just simply wait. Now, guys are saying, oh, it's impossible to win every trade. Absolutely bullshit. You can win every single trade as long as your strategy actually works right. If you're trading the buys, it's just a matter of getting in at the right time and waiting. That's it. Like I'm showing you, here's my entry. Let's say I took this bad entry and it retraced it down here. It's only a matter of time before the price actually gets back. Now look, see, I'm constantly in profit. Doesn't matter what retracements happen on a weekly basis, I'm still in profit. The key is when you're just starting out, you have to make sure that you're patient to take your largest higher low and to get out if it only makes a lower high and just wait for another higher low. Once you keep doing that, it's only a matter of time where you're going to be consistently profitable. No if nor buts nor maybes. Red line was my entry, guys. Remember, red line was my entry. It retraced and came down here. Look at where the price is now. All-time high. Came in here with last week's retracement. Look at what happened. Look at where the price ended up. Right there. I'm still in profit. So let's measure to where it went. So we went here. Eventually, it came all the way up. We're in 26,000 in 26,000 pips in profit. Let's say, you left it, which I did. I had 2 trades in, right, with multiple buy entries in that are in profit, just a matter of waiting. So look at where the price ended. So even from here, even with Friday's sell-off, I'm still 18,000 pips in profit from this entry right here, right? And I just did that as an example to show you that even if I took a bad entry, as long as I have not over leveraged, all I have to do is just sit and just wait for the trend to come back. That is what they mean when they say the trend is your friend. All right. So that was just the example of that I wanted to show you guys. So let's go back, get rid of these lines. Get rid of these lines right here. Take these out. All right. So for this week, what am I looking for? All right. So for this week, basically, it's the same thing. Still trading the trend, higher lows to higher highs. Like I mentioned to you, on your smaller time frames from your 1 hour all the way up to your 5 hour, you'll see that the market made a new low. This new low is higher than the previous new low that was made. Also, one thing I will notice is that this is a segmented low. I have videos on this on YouTube page, which talks about the difference between a segmented low and a direct low. Here we have a direct low. It moves from a higher high all the way down to a low. However, it's still considered a higher low, okay? Because although it's lower than this new low, if you look, previous new lows, it's still higher, all right? So, again, you always want to look at your biggest time frame. If your largest time frame still says higher low, it means you are still in trend. Okay, I just want to get that clear as crystal. If your largest time frame that has registered a move still says higher low, and in this case, last week, it was the 23-hour, the market is still in trend. Structure has not been broken. It's still making higher lows, higher highs. You look at the daily, it's still making higher lows, higher highs. You look at your weekly, it's still making higher lows, higher highs. You look at your monthly, it's still making higher lows, higher highs. The trend is still intact, okay? So that's one of the reasons why I mentioned, and I keep, driving the point in. But you have some people who just like to talk and like to hear themselves and just talk a bunch of nonsense and everything. And if they don't understand a concept or a strategy and everything like that, it cannot work or whatever it is. Okay, guys, I've been doing this for years. A lot of losses, a lot of heartache, and everything like that. And I finally have gotten around to understand the fact what it takes to actually wait, what I'm waiting for. It makes a difference. So I am never going to be trading for the sells, because sells on whatever time frame is only going to be temporary. And it's always going to be the smaller time frames. As long as my largest time frame still registers higher lows, I am still going to be bullish. All right. So just to recap, for this week, I'm expecting the turnaround for the market to actually get back in trend. Because like I said, on Friday, with all of that sell off on Friday and everything like that, all of that was just to distract you, okay? Because the bigger time frames, once you start from your 6 hour and you go up, you'll still see that your largest time frames are still registering higher lows. And the trend is higher low to higher high. So it's a matter of patience. It's a matter of making sure that your account is not over leveraged, and just instead of using a point 0.1 lot, use a point 0.01. It doesn't hurt. Once you get the rhythm of it, the money will come afterwards. Get the concept. Don't try to run the market down. Don't try to um, quickly make the money and everything. Get the concept. Higher lows, higher highs. Do not over leverage and you will be okay. Okay. So that's basically it for this week. Just waiting again. And the reason why I'm confident that the trend will continue is, like I said, on Friday, the weekly candle ends every Friday. And last Friday, we saw that um, this candle basically failed to even challenge the bullish activity of the previous week. So it stopped short right here. Candle has expired. So which means all candles are reset for Sunday afternoon at 6 o'clock. So expect to see a continued bullish drive to actually move forward. I'll show you something real quick. Look at this scenario right here. Similar scenario that happened back in January of this year. We had one full week of bearish activity. A lot of people are saying, yes, it's time for the sell-off. Absolutely not. It stopped short right here. Look at what happened. As soon as the market opened, boom, here we went. We went straight up to another higher high. Came back down. It finally made a higher low right here. Okay. And then it continued up again. Understand this concept, guys. The market makes higher lows, higher highs. So it does not mean that the market is going to come down and break a previous higher low. No. Okay? It's making higher lows, higher highs. So each time the low comes down to be formed, it's going to form higher. And if you look at it, each time the high is formed, it's formed higher. You may have consolidation periods and everything, but eventually it goes back to make that higher high. Higher low, higher, higher low, higher. And again, last thing, okay, zig, zag, zig, zag, zig, zag, zig. Okay, market does that every single day, every single week, every single month, every single year. All it does, it makes a low, it makes a high, it makes a low, it makes a high. That's it. It's a simple concept. But again, it's simple. People always like to say, oh, it's simple. There's nothing to it. But guess what? Can you do it? Absolutely not. Just stop talking, start learning, start practicing, and just allow the market to do what the market does. And if you don't understand, ask questions. All right. So thank you very much for watching, guys. Have a great week. God, we just give you thanks for your blessing and for your goodness. I pray that we all will be successful this week as we continue to learn and to grow. We pray. Amen. All right, guys. Thanks very much. Have a wonderful day and good luck this week. Okay. Bye bye.